right, let's take a look at the S&P from Friday, November 6, 2009, the close. Want to look at here, there's a head and shoulders setting up that was similar to the one in July. But what's interesting about this one is, if we take a look at the blue line here from 978.51, that's the 90-day low, and we extend that up, we're going to get right to about where this market found support last week, just under the 1039.80, which is a 50% retrace of the recent high of 1101.36 and the 90-day low of 978.51, which incidentally was one of the double bottoms in the previous head and shoulders that would have been created. This would have been the right shoulder, and if we extend this chart out, you would have seen the head and the left shoulder. Now, what we want to look at here is a couple different things. One, the futures are up right now as it's about 5 o'clock Eastern Daylight Time heading into Monday and November 9th. Now, if those futures are up close to where we would get an open of 1080.15. Now, if you notice, 1080.15 is the left shoulder over here, and it was a recent high and also an all-time high in the range with 1019.85, which formerly was the 50-day moving average that held the range here just under the channel. And that low resulted in holding the channel, a new high of 1101.36. Then you got the big pullback, which we predicted perfectly, all the way down to 1029.38, holding the final bullish retracement of this entire range. Now, if you take a look, you had a huge bounce up on the S&P all the way up to Friday's high and close, and then the big bust out, which caused shorts to cover because you don't see big volume here. In fact, decreasing volume since it fell in this big bar here. What this most likely means is 1080.15 may be it. Now, if we look at an RSI, that's going to top out somewhere right in here, but we'll have to wait and see. Now, this is a nasty head and shoulders with a low of 1019.95 inside the range if it cannot break the 1080.15. It looks like all roads are pointing towards 1080.15. Now, let's take a look at this channel. You can see the channel that's been drawn here, the channel that creates the H&S. What's very interesting about this is you can go down to 978.51 as we review again here, and now putting all the pieces together, you can see that 1045 is that key spot, or 1039.80 right in there. Now, if we look at the pink line, this is the key spot in the entire range of 10 years, going all the way back to the 1576.09 all-time S&P high, which came on October 12, 2007, and the recent March 5th, 2009, 666.79 low. You have to hold this pink line to remain in the upper two-thirds of the range. So this is a key spot. Notice that it's just under that 1019.95. Also notice that you've got some consolidation support right here. Finally, notice that you'd be right around 30 on the RSI to come down to this level. Incidentally, the 100-day moving average is at 1,702. And incidentally, the 150 moving average is at 995.50. Now, if we go back to the bullish side of the coin, take a look at where that 600-day moving average is. Almost exactly at that 1101.36. So what can we deduct here? Well, we can deduct that most likely 1080.15 is the spot. On a bust of 1080.15, and we're not going to say intraday here, we're going to say close, most likely 1097.91 will get tested in a double top formation. Now, the line that we didn't put on here is probably the biggest of them all, which is Echo Bubble City, 11/21/56. That's an exact 50% retracement of 1576.09 to 666.79. You go back to the Nikkei in the lost decade. You go back to the Dow in 29 to 32. Huge crash, which we had last fall. The S&P obviously wasn't around then, but the Dow, huge crash, 29, 32. You get back half of what you crashed. Echo bubble, new lows result, and of course the Great Depression. Now, we won't go into that scenario right now. There's some key things that are undercurrents here. Obviously China, the carry trade, gold, some other things. But this is the technical analysis of this. What we're looking at here is simply the fact that most likely 1080.15 is tomorrow's line in the sand. We'll reanalyze it then, but most likely we don't get a close over 1080.15 before we go back down and at least test this channel again. If we do, then you're going to go back up to 1097.91. I will not go out right now, or I should say we won't, and talk about any moves higher than 1101.36. If the S&P does not break 1121.56, which is a 50% retracement of that entire range on the close, echo bubble is in the works. And again, we don't want to scare anybody, but 18 months ago we put out our final low on the S&P 500. It was 437. If we don't break 1121.56 on a close, the S&P most likely will see that final number. 8 years of Bush bubble erased, 8 years of the Clinton prosperity erased. We go back to 1993 and 437. But that's all down the road. Right now, we're looking at 1080.15. That's the first spot. If it breaks it tomorrow, shorts should cover, and we'll probably get a double top test. More to come.